Hey guys, thanks for coming to another Ultimate Edge webinar series with Bay Equity. And this time I'm pleased to invite and announce actually Glen Smart, who's the Divisional Vice President of Reverse Mortgage Lending with Bay Equity Home Loans. That means that Glen is over everything, guys, and he knows his stuff. Glen and his team are the people that I talk to when I have questions on reverse mortgages, and they typically have the answers, believe me. Glen's the holder of what's called a Certified Reverse Mortgage Professional Designation from the National Reverse Mortgage Lenders Association, and he also serves on their independent committee. So he knows what he's talking about, and he's part of the industry, and he is with us today to tell us all about reverse mortgages and any questions you may have. Thanks, Glen. Thanks for joining us today.
John, thanks for having me. And thanks for the opportunity. I always love being able to talk to people about reverse mortgage, offering some education, because typically when we do that, people find out that it's more than just a small little program for a small segment of the population. So with that in mind, I thought I'd just share some general information. I'll ask some questions of the group along the way and share some details, and we'll talk about how the program might be best be used. Is that fair?
That is perfect. Just what we're expecting. Right. Thanks, Glen.
Every once in a while, you might ask a question. I'll ask you to hold on to it, because until I tell you what's coming, the answer may not make complete sense. But
fair enough.
All right. Recognizing that some people are visual, I went ahead and prepared some material as well. This is not just going to be a PowerPoint presentation, though, but I would like to use this tool so that I can give a little bit of background. So with your permission, we're going to jump right into this particular slide deck, if I might.
Let's do it.
All right. So we're here to get you home. That's the theme. And I like to start out when I talk about reverse mortgage. I love this quote from John Kennedy. You know, John Kennedy said, "The great enemy of the truth is often not the lie, deliberate, contrived, and dishonest, but the myth, persistent, persuasive, and unrealistic. Belief in myths allow the comfort of opinion without the discomfort of thought." And I saw this quote 10 years ago and said, this is exactly what happens in reverse mortgage. There's so many myths out there, and I spend the better part of my day talking to people to undo the myths as we go through. And John, as you mentioned, I am a certified reverse mortgage professional. There are 170 of us nationwide. And really what that means is if you ask me a question, if I don't know the answer, I'm qualified to make something up. I'm teasing now.
We're going to hold you accountable, Glen. I want you to know that.
Let's talk about the types of reverse mortgage. And I'm going to start by talking about the home equity conversion mortgage. And if you've ever seen home equity conversion mortgage, or HECM, that is simply a government insured reverse mortgage. That's the way the federal government says reverse mortgage. You know, and recognizing sometimes that reverse mortgage might not have the best acceptance rate amongst the public, some lenders don't say reverse. They call it an HECM loan. So that their customers are happier, if you will. And we do find that the acceptance rate goes up about 20% when you don't say reverse mortgage and instead you say home equity conversion mortgage.
Is that right? I had no idea of that.
Yeah, I have people that call and say, I don't want a reverse mortgage, but I want this other government program. It's fantastic. So again, that's part of what I'm here to do, is undo this. I'm not going to hide behind the name of it. It's a reverse mortgage. Instead, I'm going to show you, the pros and the cons of it and make sure that people understand it. In the past, about 99% of the reverse mortgages that were done nationwide were the home equity conversion mortgage. And then about 2 years ago, there was a private reverse mortgage that came into the marketplace, and that now accounts for about 20% of the overall volume. And again, pros and cons to both. Typically what we'll do is we'll show the consumer both options, and it'll be pretty clear which one might be a better fit for their circumstance. Okay. So the HECM product, the home equity conversion mortgage, is insured by the Department of Housing and Urban Development, where the proprietary loans are just private loans. And I'm going to use the expression HECM or reverse mortgage somewhat interchangeably throughout. Okay. At this point, though, I want to ask, what if, folks on the call, what have you heard about reverse mortgage? Good or bad? Any feedback?
Glen, I can tell you from conversations that I've had that there is a wide variety of misunderstandings about reverse mortgages. Like, well, don't they take your house and you no longer have ownership to the house? And aren't I giving away all my equity? Is that what happens? And what happens if I want to change out of a reverse mortgage? What then? Am I stuck in this thing for the rest of my life? Conceptions such as that.
Yeah, those are all great points, John. And by the way, I said you can say good or bad things. You focused on more of the negative stuff I noticed. And I tease
Well,
you.
that's the questions I get, you know.
It
It's like,
is.
this thing is
It
bad,
absolutely is.
isn't it?
Here's what I can tell you. I have people that come to me and say, I love reverse mortgages for all of these reasons. And folks will say, I hate reverse mortgages for all of these reasons. And both are wrong. You know, both are citing reasons that truly don't exist. So when we get to the heart of it, you will find that this is a mortgage loan. And like any financial product, it is not right for everybody, but it is perfect for so many. And so many don't really understand what the features are and how it might apply to them. And that's, again, what we're going to talk about here. Okay. So as I go through, I want to start with what is a reverse mortgage? And simply stated, a reverse mortgage is a home loan. That's all it is. There's nothing exotic about it. The loan allows a senior to access the equity in their home if they're refinancing, as long as that home's their primary residence, and they can use the money in any way that they see fit. Okay. As with any other mortgage that you might offer, with a reverse mortgage, the senior continues to own the house. They don't give us the ownership in any way, shape, or form. It is simply a mortgage lien, like any other mortgage. Okay. This loan is going to continue as long as at least one of my borrowers remains in the house as their primary residence, as long as they maintain their property taxes and insurance, like you would with any other type of loan, and comply with the terms of the financing agreement. And what does that mean? Like traditional mortgages, you have to keep the house in good repair, right? You can't store hazardous waste at the house. Those types of things that are typical for any type of mortgage would be the same for a reverse mortgage. But did you know that you can use a reverse mortgage to buy a new primary residence? A lot of people don't know that. Starting in 2007, HUD started to allow us to use the reverse mortgage to buy a new primary residence. And we'll talk about that as we go through. Okay.
Very good.
Some definitions. With the home equity conversion mortgage, everybody on the loan must be 62. Everybody on the loan has to be 62 years of age. Well, Glenn, I'm 58 and I have a disability. Well, then you're not 62 and you don't qualify for the HUD insured program. There is a provision for somebody over the age of 62 who's married to somebody under the age of 62. There's a provision for that that allows that non-borrowing spouse to be protected if something should happen later. Okay. With the proprietary reverse mortgage products, the minimum age in certain states is 55. Now, I can tell you for the state of Washington, that minimum age is 60. Texas is 62. So it can vary by state. And that product is not available in all states, but it is an option that we'll explore. Okay. With all reverse mortgages, the older you are, the more money you're going to get. Why would that be?
Well, because the older you are, the shorter your lifespan is left, and that's what they go off of.
You're not going to hold the loan as long. So you're given more money up front, the older you are. So as we put together the figures, we want to know the date of birth of all of our borrowers. And the reason we don't simply ask for age, if you ask a gentleman his wife's age, often he rounds and he misses by a number of years, and that can make a big difference. But also, if at the time of closing, we are within 6 months of your next birthday, we consider you to have reached that age. And again, the older you are, the more money you get. Okay. You might not love that we rounded up your age, but you are going to love that you get more money. Okay. So we'll make sure that we know that one.
Good news,
And
bad news thing.
Yeah, the amount available is based on the age of the youngest borrower. It's based on the value of the home up to HUD's limit. And HUD has a limit called a maximum claim amount. I won't get into technical terms, but there's a maximum amount we can use. And to a certain extent, the program that's selected. All of these things will determine how much money the senior can get. The first thing we're going to do is pay off any existing liens against the house. And then any monies that are left over are available to be drawn. Okay. Both the HECM, the HECM, and the proprietary reverse mortgages do not require monthly mortgage payments. They do not require that the senior ever make a monthly mortgage payment. Okay.
That's pretty cool.
It is very cool. Now, remember, the senior owns the house, so they are responsible for paying their property taxes and insurance and any HOA dues, but there are no required monthly mortgage payments going forward. Hey, did I mention before that you can buy a house using a reverse mortgage?
It's worth mentioning again, though, Glenn. That is pretty cool.
Didn't I just say you can buy a new primary residence and have no required monthly mortgage payment?
There you go.
Yes, we did. Okay, we'll talk more about that too. Let's talk about how it works. So with a reverse mortgage, let's just say that we have an $800,000 house. And based on age and the expected rates and all these things, we might provide to that senior today $350,000. And before I go too far, let me tell you this. The amount that's available changes every single week. One of the factors in determining how much is something called the expected rates, and those change every single week. So if somebody in the past said, oh, you get this much with a reverse mortgage, and that was, before Tuesday of that week, the number's different. Just know that. Okay. So in my round example here, I have an $800,000 house. We have $350,000 borrowed, let's say. And the seniors live in the house for a while. And one of them passes away. The loan will continue for the other person automatically without a change. Nothing changes. It's when my last borrower leaves the house as their primary residence, perhaps because they've passed away. The house will go to the estate, right? If you're leaving the house to your children and you put a reverse mortgage in place, you are still leaving the house to your children. We're not changing the ownership in any way. Let's say at the time of your passing, your $800,000 house went up to $900,000. But that $350,000 reverse mortgage grew because you're not making monthly payments. If you're not making a monthly mortgage payment, that interest is being added back. So perhaps at the time of your passing, your balance is now $500,000. This house is going to go to the estate, the heirs, and they're not going to inherit a $900,000 house on which $500,000 is owed. And John, they're going to do one of two things. They're going to call you to refinance that reverse mortgage into a new loan. Or more than likely what they're going to do is they're going to sell the house. So they'll sell the house for $900,000. There's a $500,000 loan due and payable, and they're going to walk away with $400,000 in equity, less whatever it costs to sell. Okay? The house is worth more, that number's higher. How are we doing so far?
Very clear. Keep it rolling, Glenn.
What if they hold it a very long period of time and the mortgage grew to $800,000, but the property value fell? Can happen. Maybe the house is worth $600,000 at that later point, but now $800,000 is owed. And my last senior passes away. The house is going to go to the estate. But at that point in time, the estate's going to say, we don't want it. It's upside down. And the estate can simply send the keys back. And the Department of Housing and Urban Development, HUD, will pay off the entirety of the loan plus the shortfall. So the estate does not have to make up the difference here. Okay? State does not have to make up the difference. Now, in the event that the senior hasn't passed away, but they just had to move out, if there's equity, it's theirs. If it's upside down, they can send the keys back and HUD will pay off the entirety of this balance. The estate or the senior in that case doesn't have to make up the difference. Okay? Very simple. If the family at this point wanted to keep the home, there's a provision that says they don't have to pay back the full balance. They only have to pay back 95% of whatever the value is at that point. So the family could keep the house by paying back 95% of this, or $570,000. And then HUD will insure and pay off the rest of it. Okay? That in a nutshell is how the reverse mortgage works. Okay. Some things you'll want to know about reverse mortgages. Certain properties are eligible, and these follow HUD's guidelines. So the program is available on single-family residences. It's also available on duplexes, triplexes, and fourplexes. So a senior could live in a fourplex as long as they live in the largest unit. They could rent out the other 3 units, receive that rental income, and have no required monthly mortgage payment on that home at all. Okay, so you're going to increase your cash flow dramatically. It's available on modular homes and planned unit developments and townhouses. It's also eligible on condominiums. Now, since it's a loan that's insured by HUD, HUD keeps an approved list of condominiums. In order to be eligible, the project must be on HUD's list, or it must be approvable, meaning that we can gather the documentation. If we demonstrate that HUD would approve it, then we can issue a spot approval, if you will. The proprietary loans don't require that it be on an approved list. They'll still look at the condominium, but it's a relaxed way. So there are some differences there. And then some manufactured homes are also eligible for the HECM product. The traditional HUD requirements have to be met. The wheels and axles have to be removed. It has to be permanently affixed. Things you would find on traditional financing. As long as that's the case, it would be eligible for one of the reverse products. Okay.
All right.
All right. I get asked this question a lot. I thought I'd throw this in there. There's a belief that if you're getting money on the reverse mortgage, that could affect your Social Security. And I want to let you know that the proceeds from a reverse mortgage are not taxable. It's not something you have to report to the IRS as taxable income. It will not affect your Social Security. It will not affect your Medicare, Medicaid, with one exception. We want to be very, very careful. If you have a subsidized Medicaid, meaning the government is subsidizing that, they will do that as long as you are not wealthy. And they classify wealth as having $3,000 in the bank. So we want to make sure that we don't give you a lump sum of cash and make you ineligible for a subsidy you're getting. Okay. In that case, we simply make the money available as you wish without it being a lump sum. Okay. That's not common, and we'll certainly help identify when that's happening. And you'll know if you are getting the subsidized amount. But otherwise, it doesn't affect your taxable income at all. You can repay or prepay the reverse mortgage at any time without a penalty. Okay, so although you're not required to ever make a monthly mortgage payment, you're not barred from doing so. So if you ever want to refinance away from it, or if you want to sell the house and move, you simply pay off the loan. You're welcome to do that. It is simply a mortgage loan at that point. You would owe whatever has been dispersed to you plus the interest that's accrued. Okay.
Makes sense.
The loan's going to continue as long as somebody lives in the house. One of my borrowers lives in the house as their primary residence. Now, the senior can be outside the home for up to 12 months for convalescent care, if that's my last occupant of the house. If, for example, you fell and broke a hip, you can be in the hospital for up to 12 months before the loan would come due and payable. If you're outside the home for more than 12 months, likely you're not coming back into the house, and the loan will come due and payable. When the senior passes or otherwise moves out, the loan's going to come due and payable. And it has to be satisfied within 6 months. Now, you get this answer on the internet. It's wrong all the time. And I want to let everybody know that. You might pull up and hear, you get a year, you get 12 months. And that is not the case. HUD allows 6 months. HUD will grant up to 2 3-month extensions, however. So you can get to a year, but it's not automatic. You have to demonstrate that you're taking some step to pay off the loan. For example, the family might have to demonstrate, well, the house is tied up in probate. We can't do anything. Okay, then HUD will grant the extensions. Or they're working to refinance it, or the house is on the market. HUD will grant the extensions. The lender wants to grant that extension. We just have to demonstrate why we did so. Okay. But what you can't do is absolutely nothing for 6 months and then hope for the extension. It won't be granted. Okay. Very common misconception.
Yeah.
Once we determine how much money the senior can get, the first thing we're going to do is pay off any existing liens against the house. So we're going to pay off any mortgages that exist or other types of liens. If there's a second lien against the house, a line of credit, that loan has to be at least 12 months old to be eligible for the reverse mortgage. But we'll pay off any liens against the house. Any additional money that's available can be paid out as the senior wishes. It can be done as a lump sum of cash. It could be taken via a line of credit and then just drawn as the senior wants it down the road. It could be taken as a monthly payment. And that monthly disbursement could be a guaranteed amount for life. We refer to that as tenure, by the way, TENURE. That's a guaranteed payment for life. If the senior says, I want more money per month, we can do that. But instead of being guaranteed for life, it would have an end date or a term. And then the most common way that people take the reverse mortgage is what's called the modified option, where they blend those choices. Maybe I want $10,000 up front. I want to leave $50,000 in a line of credit, and I'll take the rest as a monthly income. And we can customize it to match their goals. Okay, so they're highly, highly customized. Okay. How are we doing so far?
Very good. Sounds like
Right.
a great mortgage so far for the people in the right situation that are in need, doesn't it, Glenn?
You got it. So here are some definitions I gave you because I used some terms, the home equity conversion mortgage, proprietary, the types of ways of taking the money. I threw this in there just in case people wanted to know. And then here's the maximum claim amount. Here's what HUD limits us as far as a value calculation. So if your house is worth more than 1,089,300, that's okay. But I can only use that amount when I determine how much money you can get. And that number changes every single year. It's up sharply. It was 800,000 and change last year. So
Wow.
that's the number that we can use. If your house is worth more than that, perhaps that proprietary loan might be a better fit. There, the loan amounts go up to $4 million. Okay, so don't lose any hope there. Here are some of the common misconceptions I hear about reverse mortgage. They're only for people that are poor. And that is as far from the truth as you can ever find. I helped a gentleman who had $10 million in his bank account. And I asked him why he wanted the reverse mortgage. And he said, it's the cheapest money I can find. And what he wanted the money for was through the line of credit to draw as he wanted. And he was trying to do what's called offsetting sequence of returns risk. When the stock market moved and fluctuated and it was going down, he didn't want to sell his stocks. You're just realizing those losses when you do that. Instead, he was going to use the reverse mortgage line of credit to fund his daily expenses. And when the market went the other way, he might sell at that point, pay back the reverse mortgage, and do that again and again and again, and just have that flexibility.
Yeah, pretty good hedge.
Yeah, if you own a business and you want to buy inventory, you can do that using a commercial loan, very expensive, or you could use the reverse mortgage, have no required monthly mortgage payment. And then as you sell your inventory, just pay it back. And when you pay it back, you are not accruing interest on that money any longer. But the line of credit on a reverse mortgage, the unused portion, has a growth factor. If you don't take it, you get to take more later. Okay, so it can be for the very sophisticated borrower. It's not just for the person that's poor. Okay. One of the other misconceptions is that the senior somehow has sold us the house, or they're giving up the title to the house. And one of the reasons why that myth is out there is lenders did a horrible job when this program first came about. Ronald Reagan was president when the law passed to allow HUD to insure reverse mortgages. The first Bush was president when the first reverse mortgage actually got to closing. And back then, lenders used to explain it this way. Well, basically, you're selling me the house and I'm making payments to you. That has never been the case. It's never been the case. But folks did the math and said, well, gosh, what if I pass away 2 months later? I only got 2 payments and they got my house. And that's just never been the case. We've been, unfortunately, trying to undo that perception ever since. And we sort of created it as an industry. Okay. We're finding that more and more people are learning about it. I hear that reverse mortgages are expensive. Well, reverse mortgages are expensive if you hold them for a short period of time. They're not meant to be taken and held for 6 months. The longer you hold this loan, the cheaper it becomes, or the more money you take, the cheaper it becomes. It is completely inexpensive compared to every other loan you don't have to make monthly mortgage payments on forever. Okay. There just isn't one like that. It's almost like a private loan you're comparing it to. The senior's losing equity over time. Believe it or not, if you take a reverse mortgage today based on even a 4% appreciation, what we're typically seeing in the marketplace in normal times, you're still gaining equity over time. And we find that people that take the reverse mortgage actually pass along a larger portfolio to their heirs. They pass along the equity in the house, plus all the monthly mortgage payments they haven't made for X number of years, plus fewer charge card debts and all of those things. They're passing along more to their heirs. Okay. The senior family will be left with a large debt at the end. Now, if it's upside down, HUD will pay off the shortfall. And the last misconception is the senior can never sell the house. Just not the case. Okay. But I mentioned before, there is a reverse mortgage purchase program, and that came about under the Housing and Economic Recovery Act back in 2008. And with this program, you can use a reverse mortgage to buy a house. And we sort of saw that before when we had an $800,000 house, and we said that senior might be able to get $350,000. Okay. And again, that's based on their age. If they're older, they'll get more of a loan. Okay. But just for round numbers, let's say we had an $800,000 sales price and we could give the senior $400,000 as a reverse mortgage. Their down payment is $400,000. They're going to bring in 400. We're going to bring in 400,000 on the reverse mortgage, and they're going to have no required monthly mortgage payment going forward. And folks will say, well, that's a lot of money down. 50% is a large amount, or 400,000 in this case is a large down payment. Well, think about that cash buyer who goes to the realtor and says, I sold my house. I walked away with about 400,000. I don't want a monthly mortgage payment, or I don't qualify for a traditional mortgage, so I can't have a monthly mortgage payment. The realtor's job now is to go find them a house that they can pay cash for, and they can spend up to 400,000. Well, we now have the ability to help the senior buy an $800,000 house using that same $400,000 in cash with no monthly mortgage payment. We doubled their qualifying power. Okay, so it's a fantastic tool to help that borrower buy a larger home, and it can often get them the house with all the amenities that they were looking for. Okay. The reverse mortgage purchase program has some special restrictions. It was written by Congress, so there can be no seller concessions. The seller can't pay any closing costs other than normal seller paid fees. There are no points to buy down. They can't credit toward repairs. We can't do any of these things, but it's a very strong program. We've got a person that is going to put a large amount of money down and is not really going to be in a position where they don't qualify because they lost a job, like you might find with traditional financing. We don't use minimum credit scores for qualifying. We will look at credit, but we don't have those same requirements you might find for traditional home financing. Okay. And if you are in real estate, if you're a realtor, you can increase the sales price of a cash buyer, but you can also win more listing competitions. If you're going out to talk to somebody about listing their house, and you know that 3 or 4 other agents have either come before you or coming after, couldn't you run a different race and show them how you're going to advertise their home like this? How about a sign that says, ask how to buy this house and never make a monthly mortgage payment? That's a unique way to market the home. And then, John, you have many financing ways to help somebody market a home that are unique. So realtors can partner with you on this and some other tools that can set themselves apart from every other realtor, because I promise most realtors aren't talking about this and introducing this concept to the seller. Okay. It's also, if you're in real estate, a great way to attract more buyers. If you have an open house, have this as your sign writer. I promise when people walk in, they're going to want to know about this. They may not want that house, and in that case, the agent can say, well, gosh, I bet we can find you a different house we could use this for. So it is a fantastic tool if you're in real estate, how to attract more buyers and just run a different race. That's really what it's all about. Okay. When we close on a reverse mortgage, there are 2 deeds of trust. There's one in favor of the lender. This is the closing document, and one in favor of HUD. And that's for the buyer's protection. Because if the lender's making monthly mortgage payments to you, or monthly payments to you, I should say, or has a line of credit that's available, what happens if something happens to that lender? Well, if you're the consumer, the Department of Housing and Urban Development steps in right away, and they make that money available to you. So if you had money on your line of credit, HUD is backed at it, comes back to you. Okay. We would and I'd be happy to talk to anybody in real estate kind of offline about when it's time to sell, some things they'll want to know for that listing appointment, timeframes, the revenues, all of those things. We can get into that in much more detail offline. But it's also common with reverse mortgage that the property be held in trust. I know in forward mortgages, that's one of those things that lenders don't always love to hear, that the property is going to be in trust. In our world, it happens all the time. In fact, we may even accept irrevocable trusts, which is not heard of in forward mortgages. Not all trusts are approved. We'll look for certain language, but it takes us just a few minutes to tell you if the trust is going to work. Okay. We use different disclosures in our world for sharing with the customer the cost. We use the old-fashioned forms that the forward mortgage used to use instead of some of the newer newer items. And then the last thing I want to point out is reverse mortgages require that the senior complete a counseling session. They have to talk to a third-party counselor. So typically what will happen is we will go through illustrations. We'll talk about goals and we'll show some of the different ways to take the money. We'll share educational materials that the consumer should have. One of them is a pamphlet from the National Council on Aging. And that's a document that HUD likes so much. They require that consumers be given that before they start the process. I love it. It gives a great high-level overview of reverse mortgage. But the other information we share gives very detailed information regarding that senior's age and the value and what their goals are. We'll share in that set of illustrations a roster of counselors. And HUD requires that you complete a counseling session. You've got to talk to a third party. And the counselor's job is to make sure that we've explained the program properly, and that you fully understand what your obligations are and how the program works. You'll learn nothing new in counseling, by the way. We're going to explain all of that to you. Candidly, the counselor's job is also help us determine whether or not the senior is legally competent. And believe it or not, you don't have to be. We just have to know if you're not. And that comes about because we have families that, mom and dad lived in the house and dad passes away. So the kids sit down with mom early on and say, you'll never have to leave the house. And now 10 years or more goes by and mom is forgetting to take medication, or she might be a fall risk. And the family made that promise. And mom may not remember things from day to day, but she remembers that promise from 10 years ago that says, I never have to move. So now the family's having to bring in-home health care. Very expensive to do that. How do they fund that care? Well, the reverse mortgage can be a tool for doing that. So if somebody has a conservatorship or guardianship or even a power of attorney, we'll use that and we'll work with that person on behalf of the senior to free up the equity so that now that kind of care can be paid for and mom can continue to live in the house as was planned. And that's a very quick overview of reverse mortgage. I would tell you they are highly customizable. So what is true for one person will not be true for everybody. And we can happily go through. In some cases, there's not even enough money to pay off the existing loan. I have no trouble telling you that was my father's case many years ago. We could not give him enough money to pay off his mortgage. He had to bring in $6,000 at the time, kicking and screaming. He was not happy about it, made sure I knew that every day. But after 6 months of no monthly mortgage payments, he had saved more than $6,000 and called to tell me how much he appreciated. I was a genius at that point, right? He hasn't made a mortgage payment in 17 years. Okay. And I'm ecstatic about that because I want him to be comfortable, he and his wife, and they are. More importantly for me, I haven't had to contribute to their retirement over that entire period of time. The house is likely very much upside down at this point, and I don't care. I'm the estate. I was never counting on having that money. But meanwhile, he's had 17 years worth of mortgage payments he's not made. That money is sitting in a bank account. If I were concerned about my inheritance, I'm going to inherit that money. If there's equity, I'll get that as well. If there's no equity, I'm going to inherit that bank account and then send the keys back and how to pay off the shortfall. So it can be life-changing for the heirs as well, not having to fund ongoing care.
Absolutely.
What question do you have?
Let me look at the chat box. There's a few questions I have here, and let's see if anything popped into chat. Okay, so Glenn, what are the qualifications? Now you've kind of touched upon this, but let's say someone wants to move forward and get a reverse mortgage on their home. What do they have to qualify for to get the reverse mortgage? Is there credit issues? Is there income issues? What kind of stuff should they be aware of?
Okay. So if we're talking about the HUD insured program, and likely we are, we don't use a debt to income ratio. We don't have a minimum credit score. We will look at credit, by the way, and we will look at expenses. We want to make sure that somebody's going to have the ability to pay the taxes and the insurance going forward. So we'll look at those factors. If we don't meet the criteria, we may be able to qualify by setting money aside from the reverse mortgage to pay the tax and the insurance going forward. Okay, and that's called a life expectancy set aside. We can do that. The specific amounts that are available, again, age, value of the house, and that expected rate that changes every week will determine how much they can get. And, with rates being up a bit over last year, the amount available has gone down.
Yeah.
So I hesitate to say here's what it is, because that number is not static. It will move from week to week, but all it takes is a phone call for us to share some answers with you.
Yeah. It's a very methodical process, guys. I want you to know that from very good experience here working with Glenn and his crew. And I can tell you this is a life-changing loan. Glenn has said that a couple of times in the presentation, life-changing for the people that get the loan, life-changing for their kids potentially as well. And I've seen people in tears, in good tears, because it changed their way they could live the rest of their life because they were able to get a reverse mortgage and change their living standard. It was amazing. Glenn, you mentioned something when we were talking about earlier about a hybrid reverse mortgage. I noticed it wasn't in the slide. I just wanted to let you know that I have a couple of people ask me about it since you mentioned it. Tell us about a hybrid reverse mortgage. What is that all about, please?
So this is an offshoot, if you will, of that proprietary reverse mortgage. And the hybrid loan is one that a person wouldn't qualify for either the home equity conversion mortgage, the government insured loan, or a standard proprietary loan. They don't have enough money with either of those programs to close without having to bring in funds. In those cases, there's a hybrid loan that we can look at. It's for folks that have at least 10 years remaining on their loan. It is an interest-only loan, a partial interest payment for 10 years. And then at the end of that, it automatically rolls into a traditional reverse mortgage over time. So it's a way to help ease people into retirement years, where we can't eliminate the monthly payment altogether, but we can reduce it considerably. And in many cases, that tool allows somebody to stay in the house and kind of gear up toward retirement when that payment's just going to go away altogether.
Okay, and it's just same age restrictions as a regular reverse mortgage, or is there a different age limit on that one?
State by state. So in the state of Washington, that program isn't available at all. In other states, it absolutely is. There are a list of states in which it might be eligible. State of Texas, for example, that program is eligible. You have to be 62. So it's a case by case. We can visit and very briefly tell you, very quickly tell you what is available through all of those options.
Okay.
And that's the thing. We're going to take anybody's inquiry and then run the different scenarios and then come back with a menu and say, here are the different ways you might be able to accomplish your goal.
Yeah, let's touch on that a little bit. You and I have done reverse mortgages for clients before, so I kind of know our process, but let's describe it to people. Let's say they're uncertain if they even want a reverse mortgage, or they don't quite have all their questions answered yet, not sure if it's right for them. What are the steps they can take in a careful manner to learn what they need to learn so they can make a good decision about whether a reverse mortgage is right for them?
So as much as I like that there are some groups out there that will publish information online, call and get our CD or call and get that. Really what you're doing is you're getting signed up to be marketed. These groups that are doing that are selling you as a lead, and then your phone is going to ring off the hook. You're not going to enjoy that at all. I would recommend giving John a call directly so that we can take just a little bit of information and we'll come back with illustrations. Here's what I tell people. You don't even have to tell me your real name. Just remember whatever name you made up so that later when we kind of reference it, we're on the same page. We're not in the business of calling you and hounding you. We want to share information. In our first conversation, you're not going to sign anything. You just won't. We're going to ask you about what your goals are. We're going to ask for dates of birth, some details, so we can provide to you some material to go through. And then we'd like to go through that with you, because candidly, we can make it a lot easier to understand. If you have us review those items and then kind of think about how you want to go forward, you're going to see a bunch of choices. It is not uncommon for there to be several months from the point when we first interact with somebody to the time they want to start the process. The other side of that is not uncommon for somebody to call and say, I want to start this right this minute, and that's okay. We're able to move at your speed, basically. So getting that information up front allows us also to get you a roster of counselors, because if you want to move forward, a lender can take your application at any point. They just can't do anything with it until you've completed the counseling session. Okay. We like you to go through the counseling. It's a good step. It's a good protection for you as well. So we encourage you to do that. There are lenders that want you to apply right away. So you think that you're kind of locked in and you're going forward. It doesn't work that way. Even if you start the process, you have the ability to step away from it at any point if you wish. We just want to make sure that you fully understand it. It's a good fit, and it's got a lot of moving parts. It's not uncommon for us to go through the program with somebody and then they wake up the next day and say, man, I understood it yesterday. I don't understand it today again. And we'll go through it again. And that's normal. This is what we do all day. So we understand where those pinch points are, and we'll be happy to share information.
Yeah, well put. So as Glenn has outlined here in the presentation, it's really a fairly simple loan to do and to qualify for, but there are a lot of pieces, as you just said there, and we're here to help you go whatever pace makes sense for you. And I've had people, it takes months for them to get their mind around this and be comfortable moving forward. And those are some of the same people, it's one of the happiest things they ever did when they get done with it, because it gives them just life changes in their life kind of thing. So if you want to just talk about it and bring in the conversation, give me a call. Glenn is available. And as you can tell, he's a wealth of information. So oftentimes I'll bring him into the conversation early on with our clients, and they can ask anything they want. You can make the loan application and move forward if you choose. You do not have to do that until you're ready. And then you can make a decision to move forward. And then we can go fairly quickly if you want us to do so, but we don't have to, guys. It's whatever pace works best for you. So Glenn, you've hit, I think, both sides of this, but what should people kind of be concerned about, aware of, that we haven't talked about that on reverse mortgages? Well, why would they not qualify, for instance? Things of that nature.
Well, there are reasons to not qualify. Typically, you owe too much in relation to what we can make available to you. That might be a reason to not qualify. There are reasons why you may not want to take the loan, and we run across that. One of the questions that we ask, one of the things we want to understand is, do you plan on staying in the house as your primary residence? We want to be very careful that somebody is not going to do a reverse mortgage and then plan on selling in 6 months. Like with any loan, there are upfront costs. And when you look at that over a 6-month period, that may not be the better choice of loan. So we're going to go through that. In some cases, we have a senior that can't stay in the home because the physical layout of the house doesn't make that possible. Okay. And that might be a conversation around, look, if you're going to be selling anyway, let us help you buy the next house. Or maybe it's a matter of, with the reverse mortgage, you can get the funds you need to add grab bars, to do the stair lift, to do the things that allow you to stay in the house. Okay, so that you're not faced with moving out quickly. It frees up a lot of opportunities.
Yeah, gives people freedom at times. Yeah, so if you're interested in asking more questions about reverse mortgages, give me a call. As I said, I can bring Glenn into the conversation early if need be. What typically happens, guys, is we're going to gather just enough information from you, which basically means how much your home you think it's worth now, how much you owe in a home, and what your birth dates are. It's kind of what we need. And then Glenn and his team will prepare a presentation, which is very thorough, and I'll give it to you, and we'll chat about it. And once again, it doesn't cost anything to talk about this. And if we need to bring Glenn into the loop, we will at that time. And if you're ready to move forward, we can do that as well. We try to make it as easy and as clear as possible so that you can make an informed and good decision if you want to reverse mortgage, just like all the loans that we do here. Absolutely. Glenn, it's been really informative. I remember that I think we loan reverse mortgages in 49 states. Am I correct on that?
We are in 49 states. Yes, sir.
And what state do we not lend in? Can you
I
remind
don't
me?
want to pick on New York, but they're kind of a tough state.
There you go.
All but New York.
Well, I'm not licensed in New York, so that doesn't hurt my feelings at all anyway. It's okay.
Very good. Yeah.
All right. Let me check the chat box here, see if there's any more questions. I think we're good, Glenn. Thanks so much for coming on board today and enlightening us all on reverse mortgages. Is there any closing thoughts, any changes on reverse mortgage over this last year that you want to highlight, maybe that you didn't bring out in a conversation, anything like that?
There's been a lot of talk about the new reverse mortgage because there were some safeguards put in place for non-borrowing spouses. So if you have somebody who is over the age of 62, married to somebody under the age of 62, for the last several years, there's been a change in how those are handled and some safeguards put in place. And people are starting to learn more and more about them and accept them. That would be the biggest change. We're not expecting anything huge over the next 12 months.
All right, very good.
Right, sir.
Glen Smart, Vice President of Bay Equity Reverse Mortgage Division. Thanks so much for your time. Appreciate it, Glen, as always.
I appreciate it.